So here's the thing that you have to remember. Economic nexus is not just for online sales, and it's not just for sellers of tangible personal property. It is for all companies. Even a company like Dena's and mine, we have to monitor because I have clients all over the country. I think you have clients all over the country. So we have to monitor, do we exceed the economic thresholds?
So you're saying that I have an accounting practice. I'm in the cloud. I'm serving clients everywhere. I have to start counting too?
Yes.
Oh. Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
I'm David Leary.
I'm Dena Oberst.
And I'm Diane Yetter.
Thanks for joining us. We are at Accountex USA in Boston, here to talk sales tax. So do you want to introduce yourself, basically what firm you're with and some background, and then we'll jump into sales tax.
We want to learn. So how about you go first, Dena?
Okay, great. Well, I'm Dena Oberst. I'm the CEO of Gable Tax Group. We're a sales tax outsourcing provider. So what we do is we do multi-state sales and use tax returns for businesses, and we mostly support CPAs. So we're usually working direct with accounting firms and bookkeepers to be their in-house sales tax department.
Got it. So I have a client that does e-commerce in like 20 states. I do not have the expertise to do those returns, so you guys will take care of those for me?
Exactly. I mean, usually CPAs may do their sales tax return for the one state that they're in, but once you go to multi-state, most CPAs say, I hate sales tax returns. And I'm like, well, we love them. So I've been doing this for 28 years.
Gotcha.
It's like outsourcing your payroll, in a way.
It's like outsourcing your payroll, exactly. We handle all the payment processing, journal entries, everything. Just like as if you had it in-house, but outsourced.
And Diane?
I'm Diane Yetter. I am the president of Yetter Tax and the founder of the Sales Tax Institute. I am the sales tax nerd, and we provide sales tax education and resources through our Sales Tax Institute division, including online classes. In fact, later this month, we're launching our next round of Sales Tax Jumpstart, which is a 9-week online live class. So accountants that need to know more about sales tax, that's a perfect venue for them to learn about that. And then we have tons of free resources on our website all about this economic nexus that I know we're going to talk about, white papers and things like that. And then through Yetter Tax, we are an advisory firm. We don't do compliance like Dena does. We help people understand where they have to collect tax, what's taxable that they buy and sell, and we can negotiate settlement agreements, help with audit defense, and then we also are technology partners with the largest providers of sales tax technology, so we partner with them and help our clients find the best solution for them, we're not just a one person or one firm partner.
Gotcha. And then I consciously go and I pick people that I want to bring on to interview on the podcast, but apparently you two knew each other from the past already.
We did.
Your career.
We did. We both, well, I don't know if she started at Arthur Andersen, and I didn't start at Arthur Andersen. I started at Arthur Andersen as an experienced hire doing sales tax, because back in those days in the SALT group, there weren't a whole lot of sales tax people. You maybe did state income tax, but not SALT. So yeah, Diane and I go way back. We actually used to train and on software together for a software provider back in the 90s.
I'm going to make a big ask of you, Diane, which is, David and I had a brief episode interview post Wayfair, like the week after that decision came out, right? And since then, we haven't talked about sales tax.
Oh, gosh. You guys have missed out a lot.
I know. So I'm wondering if you can, and I know you just did like a 3-hour class, and we don't have 3 hours, but if you could kind of give us, for the uninitiated, right, what is the landscape of sales tax in the United States post Wayfair?
Or even just talk about what the Wayfair decision was. I think people have heard about it, but even in those days when we brought in somebody to talk about that, we had 200 downloads at the time. Yeah. So we have lots of new ears and new listeners, and maybe they haven't heard of it yet.
So briefly, what the Wayfair decision did is, how I describe it, is it turned the sales tax world upside down and inside out. So prior to June 21st, 2018, companies were required to collect tax where they had physical presence. And that physical presence could be through their own people, through independent contractors, through paying commission payments or referral payments, through states had enacted what we called click-through nexus. A lot of people refer to it as the Amazon tax, because it was the Amazon model that they would pay people that referred people to buy things off of Amazon. They would pay them a commission. And so that's what the states went after. That started in 2008 in New York. But you had to have physical presence. So things like having inventory in a warehouse, which has caught a lot of Amazon FBA sellers with physical presence. So that was the rule over 2 major court cases going back to 1967, that you had to have substantial physical presence.
So for example, I'm selling something out of my house in California and I'm shipping outside of California. In the past, as long as my operations were all in California, my inventory was there, I didn't have to deal with collecting sales tax from Wisconsin or something.
Correct.
Like that.
You'd collect for California, but that was the only state you had to worry about.
Okay.
And what happened in the Wayfair decision is South Dakota passed a law in 2017 that said we don't think physical presence is a requirement, and rather it should be economic. And so South Dakota passed a law that said if you make more than $100,000 of sales or 200 transactions into the state of South Dakota,
which are very different things.
Very different, exactly. That constitutes substantial presence. And so they said, we don't think physical needs to be part of that.
Right.
And the way the South Dakota law was written, it was able to be fast-tracked. So we saw the fastest movement from a law being passed to a U.S. Supreme Court decision. The other kind of little nerdiness of it is the case is South Dakota v. Wayfair. Most tax cases are taxpayer v. state because it is the result of an audit. The South Dakota law required a proactive registration as of May 1 of 17, and anybody that did not register that South Dakota believed had met that threshold, South Dakota sued. So that's why the case is the reverse, and it was initiated. They sued Wayfair for not filing that proactive registration that was required.
Gotcha.
So the Supreme Court, fast forward, I was at the oral arguments, didn't get to see the whole thing.
But still super cool.
I got in line at 4:30 in the morning, and I was 7 people too late to get in for the whole thing. So I saw the first 2 minutes, and then just hanging out and doing all that. So it was quite fun to be there. It was exciting.
You tailgated the decision.
I did. I tailgated. Hint, if you want to go, you can actually pay homeless people to go and get in line. So next time, I will go find a homeless person and pay them $100 to go get in line at midnight. But what the Supreme Court came out June 21st, it was actually in the middle of our Basics of Sales Tax class, which was kind of exciting. And what they said is the Commerce Clause, which is what it's based on, actually does not have the word physical in it. It requires substantial presence.
So what is that? Yeah, that's the question,
exactly.
Right?
And so what the court said is we believe that South Dakota's law meets the Commerce Clause requirements. And so that has now kind of become the standard of $100,000 or 200 transactions. There's some other nuances like no retroactivity and not an undue burden on taxpayers. And so there's been a lot of discussion about what is an undue burden. And then also as you compare state sizes from South Dakota to a state, say California, New York, Texas, is 100,000 or 200 really equivalent in those states?
Right. So Wisconsin just picked that as the threshold.
That's what most of the states picked, was the 100,000 or 200 coming out of the gate. Correct.
Okay. And the Supreme Court, but they didn't weigh in on whether that was appropriate. Or
what they said was for South Dakota, it was appropriate.
Oh, South Dakota. Okay. So for South Dakota, it was appropriate, but they didn't actually say it's appropriate for every other state. They just said it's possible. It's possible now to do this.
Correct.
Okay.
And so what most of the states have viewed, except for Kansas, is that is kind of the threshold. You shouldn't go below that threshold.
Okay. But that threshold can be very low if you're selling $10 widgets.
Correct.
200 of those, it's not that many, not that much volume, not much in terms of dollars.
Correct.
So, right, like that's creating I'm thinking to myself, if I'm selling a low dollar value item, maybe I just stop selling to those states. Because I'm not making enough money to pay for the compliance. And I guess Dena, we can talk about this, like how much it actually costs now to comply.
Right.
Because isn't the big picture implication of all this is now I'm a small seller in California and I'm selling to people in every state. What do I do? It's overwhelming, right?
It is overwhelming. And a lot of businesses that are selling in multiple states, whether it's just e-commerce, sometimes that's just one of the revenue streams. It's not their only revenue stream is to use, one of the big marketplace platforms. But the number of transactions, like Diane said, that has come out, a lot of people are like, how do I comply with that? And what happens if I don't? Now, if you went back prior to this last, I would say the last 12 months, the states had the list of inventory. They knew exactly where Amazon's customers were. And so those businesses were getting letters. So they knew who they are. So it's not like you can just hide. So again, you sell 200 coffee mugs.
So people who were using Fulfilled by Amazon, I understand that's where Amazon takes your inventory and distributes it around all of their warehouses. Mm-hmm. There's 26 states? Or
it's growing. Missouri, Idaho, and Oklahoma have warehouses that just opened or are due to open, and those are 3 brand new states that had not had warehouses before.
So basically, if you used FBA and you want to be compliant, you kind of have to, you were already filing in pretty much all those states.
You should have been filing.
That's kind of the confusion, and that's where people like Diana come in and say, well, the economic nexus, the revenue threshold, is the newest thing since the Wayfarer, but the physical presence is not dead. So if you were selling on Amazon and had goods in inventory, you still have to register. It has nothing to do with the number of threshold, the number of transactions. And that's where a lot of businesses are confused. They call me all the time, but Dena, maybe I have 200. I'm like, yeah, but you had physical presence there. You need to register. There's a lot of other nuances I won't even get into. We don't have time. We'll talk about the marketplace facilitator law, which adds even, another layer of confusion to businesses. But I would say on the compliance side, for sure, the volume of returns for any business has grown substantially. And I would say probably by 2020, most of those companies should be filing in every state. And
you touched on, or you mentioned the risk of noncompliance. What are those risks if I just ignore? I'm in California. What's South Dakota going to do to me?
Well, this is what I tell, and then definitely let Diane opine on it. But I always tell businesses all the time: do you want to lose 10% of your gross revenue in taxes that belong to your consumer? And they're like, well, no. I'm like, well, you are now taking the responsibility for it. Why not just find a solution to implement a process? Whether it's technology and outsource, and collect it from the consumer. It's a consumer's tax. These businesses shouldn't be absorbing that as a liability, and it's really risky. And if they're not going to do it, I always say, you better accrue something on your books, because 2020's, we're going to be a second year into this, and it'll be really interesting to see how the states enact.
So you want to basically build the proper system and have the proper system procedures, so all you're doing is you're just collecting the tax and passing it on. And you're really not... You want to eliminate the burden. It's not your tax as a small business owner. It's just you just have to create a process to move that money through, and if you do that, you just can forget about it.
Correct.
But that's easier said than done, right?
It is. That's true. But that's why there's
cloud accounting, right?
Yes, that's why there's platforms out there that can help, and there's a whole host of them. As Diane mentioned, they do a lot of implementation. So there's definitely a lot of options out there for businesses, large and small.
I think I've seen some of the e-commerce conversations where people are they're worried about the big companies like Amazon turning over data to the agencies or being forced to collect it on their behalf. It gets very, very messy, because then if you're shipping some stuff on your own and some stuff through Amazon, Amazon can't file your return for you.
Well,
it's very complex.
Some of it can, right? So I know Diane's going to have a whole topic on it this afternoon about the marketplace facilitator and how Amazon and some of those other platforms are now going to be required to collect and remit tax on behalf of the sellers. But being on the business side, I don't have one client that just sells on Amazon.
Yeah, how does that even work?
They sell on their own website, and they have other platforms. And so, if it says $100,000 in gross sales, that's gross sales. That's not taxable sales. So we go back to that discussion, right, Diana? It's is that really gross sales, meaning the marketplace sales, and including the ones that you have from your own website? I tell my clients, yes. If you met the threshold on gross sales completely, whether or not Amazon's reporting on your behalf and you have the remainder, you need to register. Again, you want to lose 10% of your revenue? I don't think so.
Well, and the states are starting to come out. So on our website, salestaxinstitute.com, we've got a couple of great remote seller charts and economic nexus charts. And so we are tracking whether or not the state has enacted marketplace facilitation laws. And what that is it is the state's attempt to reduce the burden on the very small sellers. So sellers that exclusively sell on marketplaces, Amazon, Etsy, eBay, Walmart, Google, all of those platforms, that the states are saying, individual seller, you don't have to be the one to register and collect. The marketplace will do that, and they file a single return for all their sellers. It lessens the confusion of the consumer. If you go on Amazon and you buy the same thing, you could have 3 different situations. You could be buying direct from Amazon, in which case they're collecting tax in every state. You could be buying from a third-party seller that does FBA, and so they're registered in a number of states, or should be. Or you buy from somebody that self-fulfills that maybe is only registered in their home state. So you can buy the same thing from 3 different vendors and get 3 different tax results. Confusing for the consumer,
yes,
right?
Right.
So what the states are saying is if you're selling through Amazon or any of the other marketplaces, the marketplace will take that responsibility. So if you're a seller, you go on to the marketplace, you can't even turn those marketplace states on or off. And today we're up to 37 states that have passed that.
The market, so Amazon is going to collect. And when does that start? Is that already happening?
It's already happened. Of the 37, there's 14 that are not yet effective. We've got a bunch coming on 10/1, and we've got a couple January 1. A bunch just came on July 1. So that is going to reduce the burden. But where the complexity comes in is just what Dena was talking about, is if you're multi-channel, which many sellers are, so you sell through Amazon, eBay, Etsy, Walmart, and your own website, when you're figuring out if you've exceeded that threshold, what do you include? And some of the states say you have to include everything, like Washington. But there's some other states that say, for example, Arizona says if the marketplace is collecting, you exclude those even though they otherwise say your gross sales. So now, as long as you can confirm, which all the big players have lists on their website that show here's where we're collecting as of what date, you get to exclude those sales. So now if you're below the threshold, in Arizona, they go into effect 10/1. They're the only ones that's doing a phase-in for 2019. It's $200,000 in sales, no transaction count. Exclude your marketplace. If you're below that, you don't have to register. In January, it drops to $150,000. In 2021, it'll drop to $100,000. So it's an ongoing exercise to continue to monitor your transactions, especially as we've seen a number of states. We've had 7 states change their thresholds. We had 6 of them originally enacted with a transaction count and then realized they caught a whole lot of tiny sellers, so they've eliminated the transaction count and now just have a dollar threshold.
Oh, that's good, because that transaction count seemed ridiculous to me.
Right, and so we're seeing that. And, big states like California, Texas, and New York are all at 500,000. Texas and California are dollars only. New York has an and test, so it's 500,000 in sales and 100 transactions. So they're saying, if you make one $500,000 transaction, you don't have to register. You still have to have 100 transactions in New York. But most states are an or test.
So if I'm selling on Amazon, so Amazon's going to now remit and pay my sales tax for me for some portion of my business. Is there official, I'm thinking, and I know this is not the right analogy, but like a 1099, it's kind of standard, right? Like you're going to get a 1099 and it's very clear of what you need to do with that on your own personal income taxes or your business income taxes, right? Is there kind of that equivalent where when Amazon pays this on these different states, you're getting a real form, or is it just going to be like, here's the report, Amazon, I'm doing air quotes here, Amazon created this special sales tax report, and that's kind of what you get, and now you got to backwards figure that in? I mean, maybe this is a question for you, Dena.
Well, in the Amazon Marketplace platform, when you run the reports to do your tax returns, it'll actually list which transactions were reported by Amazon.
Broken down by each state or each
right.
nexus.
So, I mean, they still want another revenue. A business still would want another revenue. They still need another products. And so from the tax perspective, in that column, it'll say Amazon reported the tax on behalf of the seller. And then there's the other states that still have tax turned on. Because like Diane said, this is kind of a rolling thing, this marketplace facilitator law. It's not all states now. Some are in October, some are January 1st, 2020. And it's not all states, but probably by next year this time it'll be all the states. I can't imagine not. But so it's actually listed on the report the sellers can see.
This episode of the Cloud Accounting Podcast is sponsored by Right Networks. In a perfect world, everyone would have 100% of their clients on a cloud-based accounting system using cloud-based apps. But The world isn't perfect, and clients have a wide range of needs. And for some, this means using desktop-based software. That's where Right Networks comes in. Right Networks is your 100% accounting-focused desktop in the cloud that also includes an ecosystem of over 250 connected apps. As you and your clients take the journey to the cloud, Right Networks will be at your side, innovating the best ways to leverage the true cloud future by investing heavily in cloud apps like Transaction Pro and AutoFi. They've created an always-on environment that supports 24/7 data transfer. Right Networks also offers no scheduled downtime for maintenance or application updates and meets the industry's highest security standards. To join the more than 50,000 firms that use Right Networks daily with their clients, head over to cloudaccountingpodcast.promo/RNCloud. That is cloudaccountingpodcast.promo/RNCLOUD. And be sure to visit the Right Networks booth in San Jose at QuickBooks Connect 2019.
So, if I'm exclusively selling on Amazon and some of these all these other marketplaces that are now going to collect and remit on my behalf, I still have to register in the states where I have exceeded the threshold?
Maybe. I was going to say maybe. If it's a gross receipt state, maybe.
The states are starting... So if I can just answer your question quickly, some of the states in their marketplace legislation require, like a 1099 form, there's a certificate. Think of it as almost even a reverse exemption certificate that the marketplaces will need to provide to the sellers. So that is one of the things that the states are putting in there. There's a lot of crazy liability issues that are being worked through. There's a task force that the Multi-State Tax Commission has put together on marketplace facilitation. I'm on that task force. We had our first call last week. So we're working on trying to figure out how to come to a happy medium between the states and the sellers and the facilitators in terms of shifting that liability and responsibility and who will have to issue certificates or not. So all of that is kind of evolving, and what the states are seeing is, now to your question about, do I have to file if I'm strictly on a marketplace and they're collecting? Some of the states say yes. A state like Washington, that you have to file the business and occupation tax, which is their gross receipts tax, on the same form. They definitely want you there. Some of the states want you to include the sales, and then there'll be a deduction line. Some of the states, New Jersey has come out and said, if you're strictly marketplace and it's collecting, if you're already registered, we're going to put you on inactive status. And then if you start making sales that you need to collect, just call us and we'll make you active again. Some of them are saying cancel your registration and then re-register. We have the same question if you drop below the threshold. What happens? So the states are figuring it out, but they're ending up with a lot of zero returns or very low dollar returns that are very expensive for them to process. So the states are still figuring it out.
It's expensive for the businesses to file.
Both sides, right? It's expensive for both sides.
It is. It's a burden for both sides, exactly.
Which I would say is why it's the greatest change, I would say, in the sales tax since I've been doing it. This has been the greatest change, where it happens probably every week, every month. There's some change. It's really hard to advise clients. Like we were talking about earlier, you get clients to register because they met the threshold, and then they come up with a marketplace facilitator. Now what? They're already registered, so what do? Do you, some states say you can cancel your registration, some say you can't.
Yeah, and do you have to file separately? Like, you have to file, like I sold everything on Amazon. They're going to remit. Do I file my own sales tax return too?
In some of the states, because the states want to see the revenue, and then you take your deduction.
Oh, you take a deduction.
You take a deduction. So you file a zero return, but it's a way for the states now to get data that when they go to audit the marketplace, they know these are the sales that should have been reported because they're getting it that way. So it's a lot of data analytics that the states are trying to use the information for.
But not every state does it that way.
But not every state does it that way. Exactly.
So is there an end to this? Like every month, every quarter, somebody's discovering something. Oh, this is kind of broken in this new system, and they're adjusting, changing the laws. Like, is this going to 3 years down the road? Like, okay, is this going to stabilize here?
I think it will. We're definitely getting close. We have all but 2 states that have enacted economics. So Missouri and Florida. Florida has already pre-filed legislation for next year. Kansas came out with an administrative. They tried to pass it twice. It got vetoed by the governor because it was bundled in with some other issues that she didn't want to sign. So Kansas came out administratively and said, under our existing law, which a number of other states did, we're going to impose it, except we do not believe we can authorize thresholds because that would be granting an exemption, which requires legislation. So Kansas has a 0 threshold starting October 1. People have appealed to the Attorney General. The Attorney General of Kansas has said that they will come out with an opinion before October 1 when it's effective. So we'll see on Kansas, but otherwise Missouri and Florida are the only ones. The marketplace, as I said, we've got 37 that have passed it. The only 2 that are possible yet this year are Michigan and North Carolina that have it proposed, but they're still in legislative session. So most of the legislative sessions have ended, and so we're waiting till next year to see what's going to happen. But we do have cleanup. We have administrative rules. Illinois passed some goofy rules that go into effect next July, switching the sourcing rules. How they wrote it, it's unconstitutional under the Illinois Constitution. So we're hoping there'll be some cleanup legislation in the veto session this fall. If not, early next year. There's coalitions of people getting ready to file a lawsuit against Illinois. So right now, yes, there's a lot of turmoil. It's hard to stay on top of it. But I think it'll slow down after next year. And then I think the next stage will be as audits start happening. So 3 to 5 years out, we'll probably now see some of the administrative things get worked out a little bit more.
So, Dena, your business must just be booming at Gable.
It is booming.
To me, this resembles payroll. Like David said earlier, like a lot of firms used to do payroll for their clients. Pretty much everybody that I talk to has gotten out of it and outsources that now, either to a payroll provider. So do you see is that where sales tax is headed? You know?
Well, absolutely, because, small companies, it's the small businesses, the e-commerce businesses that are impacted the most. The ones that are well established are already filing sales tax returns everywhere based on physical presence. And they just don't even have a tax department, let alone sometimes an accounting department. Yeah. You're usually working with the CEO or the founder and some salespeople. So they're never going to have that in-house. So it's definitely been a good solution for the e-commerce businesses to have an independent, because quite frankly, people like me usually sit in the big 4 accounting firms, and it's kind of untouchable for a startup company to have a sales tax compliance team.
Yeah.
We've definitely been popular this last year.
So I know you're working with CPA firms. So I'm a CPA. I have clients that have Nexus, all this stuff, and I want to pass it off to you guys. You guys will take care of that. But do you also work direct with a lot of businesses?
Absolutely. Absolutely. Yeah, we work direct with businesses all the time. Yeah. But really, since the Wayfair decision last summer, we just kind of been focused on working with the CPAs, because that's where all the businesses go. They go to their bookkeeper and their CPA saying, help, what's going on with Wayfair? Or I got a letter, how do I comply? And most CPA firms, again, don't specialize in sales tax. So where do they go? Are they going to go to their competitor and refer their client to a competitor? No, they're not. And so Gable Tax Group is going to be the sales tax guru for them to go to keep the competitors out from poaching their clients.
So I can pretend I have a sales tax department. I'm like, oh, great, I have a sales tax team.
That's right.
We can handle this.
Well, it's just like I handle payroll for my client, right?
Right.
And to them, I'm doing it, but really, it's a payroll provider that I'm working with, right? So
exactly.
That's right.
So here's a question: what do you think the odds are that the federal government ever gets its act together and Congress unifies the states and why can't we have a system where we just file with
that's
one?
Called the Avalera short. It was short on Avalera and then push for that decision.
Yeah, so I get asked this question all the time. Yeah. And there are, I think it's 3 current federal bills pending. Dena, object if you disagree.
Nope.
Don't hold your breath.
Yeah, that's what I would
it's not
say.
going to happen. At this point, so a couple of things to keep in mind. If the federal government is going to eliminate a revenue source for the states, the federal government must reimburse the states for the lost revenue. All but 2 states, well, we've got 3 that come on 10-1, but basically all but 2 states already have a revenue stream. So to repeal something that is already in place is not going to happen. The only other time that I've really seen that happen is the Internet Tax Freedom Act. And when that came out, there was legislation that said states cannot tax internet access if they didn't have it in place at that time. There were 8 states that were grandfathered in when the bill went permanent under President Obama. It gave them until 2020 to eliminate it. So we've got a couple of states that's their legislation to eliminate it. That's really the last time we've seen the federal government go in and kind of take a wholesale change to that. But keep in mind, that bill was passed when the internet was in its infancy. And when you paid AOL to have online access. Today it's your phone bill. It's a general commodity. So I almost feel like the Internet Tax Freedom Act and no tax on internet access is almost not needed today, but that's in place. So no, I do not think. And the other reason that I don't is the states all kind of came together and setting that threshold, setting the 100,000 or 200 transactions, and not going retroactive. Nobody has made it effective earlier than June 21st of 2018, and other than a couple of
knock on wood.
Well, there's a couple of weird things called cookie nexus, but we won't get into that today.
The internet browsers, like an internet cookie could.
It's a digital cookie, yeah. So you guys drop cookies on all of your listeners' computers so that you can track them and they come back.
Oh no, this is actually a big problem. This is a problem with podcasting. Is it wasn't designed to track well. So other than people downloading, you have no idea
that people are listening.
Yeah.
So I drop cookies, you know. So
every website,
pretty
much,
and so that was considered physical presence because in the states that did that, which were Massachusetts and Ohio, that was a physical presence. So what is happening is the states all said, we don't want the feds to get involved. We gave the feds. There has been federal legislation pending since, I remember the first one in 1988, and it goes back even before that. So the federal government has done nothing to that. And what the states are saying is, we are doing this in a measured, appropriate way. There's arguments as what is appropriate, but we're being somewhat consistent. We're being reasonable. We're not going retroactive. Feds, stay out of it. Now what Kansas has done, that's, kind of tipping the apple cart a little bit. Hawaii attempted to go back to January 1 and within days got slapped down by all of their fellow states, changed it and said, we'll make it July 1. So the states are kind of self-policing on that, and the bills are getting passed. The only really goofy thing is New Hampshire with no sales tax. They've passed a law that now any state that wants to require a New Hampshire business to collect their tax must apply to the New Hampshire Department of Justice to be certified that they are not putting an undue burden on a New Hampshire business.
So the state's having to register with another state,
right?
How does
it's
even
crazy.
work?
Yeah, it's crazy. We haven't seen how that's going to work.
Yeah, can they do that to each? Yeah,
well, that's
a constitutional question, right?
Right. That is
the
question.
Oh my gosh! So more court cases coming.
Yes.
I imagine. So how are we doing on time? Because I have one more big question. I'd love to.
I'm good.
Yeah.
Okay.
I'm good.
So tax on services, right? So we've been talking about. I think we haven't said it explicitly, but mostly about goods, right? And that matters to our clients of CPA firms, but CPA firms and CPA firm owners are probably very interested to know what's going to happen.
Well, especially our cloud accounting podcast listeners, because a lot of them have a cloud accounting-based practices, and they're having clients now in multiple states.
Yeah, we had clients when I was in practice in 26 states, and not to mention different countries. So what do we have to look forward to in terms of the states passing? I said, how many states collect tax on CPA services or accounting services or bookkeeping services?
So one, it's South Dakota.
Okay.
Yeah.
Great. South Dakota is the leader here.
Yeah. So here's the thing that you have to remember is when economic nexus is not just for online sales, and it's not just for sellers of tangible personal property. It is for all companies. Okay. Most of the states use a gross sales threshold. There's a few that use taxable sales and a few that use retail, which means if you're a wholesaler, you exclude your sales for resale. So even a company like Dena's and mine, we have to monitor, because I have clients all over the country. I think you have clients all over the country. So we have to monitor, do we exceed the economic thresholds? Now, in most states...
So let me hold you there just for a second. So you're saying that, like, I have an accounting practice. I'm in the cloud. I'm serving clients everywhere. I have to start counting too?
Yes.
Oh. I feel like a lot of accountants and bookkeepers don't know this.
Don't realize it.
Yeah.
Here's why. Most accountants don't just do accounting services. In my workshop yesterday, I had a mix of people that say, I'm a reseller of QuickBooks Online, Xero, name your platform, because a lot of them do that so that they get, an additional revenue source. So they're a reseller of cloud applications. There's a number of states that tax cloud software and cloud applications.
Wow.
So now, if it's a gross sales state, you have to include your professional services revenue to see if you're above the threshold, and then you have to tax those. In my business, I've stayed out of selling on-demand webinars because those are considered digital audio visual, and that's taxable in a bunch of states.
Wow.
So
I did not know this.
So I would say about 12 or so states.
This is why we aren't going to charge for the Cloud Accounting Podcast. It's too much work.
So let me get this straight. This could change depending on how I structure my engagements, right? So
exactly.
Let's say I purchase the software. Let's say it's a QuickBooks Online. And then I just bundle that with my services, but I'm not explicitly charging the client for that subscription. I own the subscription, and I'm just provide. That's different than if I resell. So I get the subscription, Intuit charges me, and then I resell to the client, and it's as if it's their subscription.
Correct.
That's two different situations.
Yeah, but be very careful about bundling.
Right.
Okay. Yeah.
Because if you bundle things that are not taxable with things that are taxable,
right,
the whole thing could be taxable. Okay. So just be very careful.
So I want to own. I don't want to be reselling software. If that's not my main business, I want to be
turn it into a commission. Get a
right,
referral fee, something. Let the software company do it, because the trick also becomes, if you buy it and then you provide it as part of your monthly recurring fee.
Yeah.
Intuit has to charge you the tax on that, and they have to know where your client is, because if you're giving your client access to that QuickBooks license or subscription, then they need to know, so they're going to charge you the tax based on where your customer is.
I don't think they do that.
So I was going to say,
but that's what they should be doing.
So,
but here's the thing: if they don't, because they've considered it to be you, and you're in California, and California doesn't tax SaaS, but you're having a client in Washington use it, you now potentially owe Washington use tax on that, because you're using it in Washington, and so it adds a lot of complexity.
Washington use tax is no joke.
It is not.
There's some hefty fines if you don't comply.
39% penalty Washington imposes if they catch you. Wow.
So this could be a session you guys should do at one of the future conferences, just of how to be sales tax compliant in your own
firm.
And what's the best strategy for bundling, doing webinars, if you're doing bar work, any of that.
Yeah.
And so you mentioned only South Dakota collects a tax on services.
On professional services, accounting services.
But
lots of other states tax computer-related services. So if you're doing installation of software, you're doing training on software, digital goods. DC and Iowa just started taxing those products, those types of digital services effective January 1. I think that's where we're going to see more movement, because states went from taxing physically delivered software. Then when it was electronically downloaded, it was like, oh, it's exactly the same thing. So I go into the store and I buy QuickBooks on a disk, taxable everywhere. I go to QuickBooks Online and I download it. I install it on my computer. Not taxable everywhere, but moving. California, it's not taxable. Now I'm accessing QuickBooks Online, taxable in fewer states. So you've got the exact same product sold in different mediums, taxed differently. And we're seeing states kind of move along that continuum to start charging or start imposing tax on more of those types of things, more services. The economy has shifted. We used to be 70% manufacturing. Now we're 30% manufacturing and 70% service. The state revenues are plummeting, and so they're trying to figure out, how do we do this? Economic nexus is one way, but broadening their tax base is the other. They can't raise the rates higher than they are.
Do you think that professional services, that it's inevitable they'll get taxed someday? I feel like, NASBA, AICPA have been doing a good job of clamping down on that and stopping the legislation before it ever gets to a vote most of the time, along with other professional groups. But like, to me, as we move more to a services-based economy, a digital economy, it seems kind of inevitable that the states won't try to grab that money, right?
Well, I know, because California, right? I'm in California. It comes up all the time.
Yeah, every year it seems like there's an effort.
But, I mean, really, let's just see the impact of the Wayfarer. This is just my opinion on it. But, as the states are trying to even deal with new businesses registering and all the tax that they're going to get from the product sales, I just think service is just going to be a little bit further out there right now. Not to say that it's not going to happen. I mean, people aren't going to comply. States need revenue. They're going to tax it. But professional services is definitely, it's not off the table, but I can't see in the next 12 months that that's just me, but
Diane
so
our listeners have 12 months.
well, I'm just saying the Wayfarer. It'll be Wayfarer. The decision will be 2 years old by then.
But I think what's important for your listeners to keep in mind is I was in the keynote this morning, and Dan, Gary, and Jeannie talk about how the accounting firm of today needs to diversify and start doing more than straight compliance business. And so as you move into doing different things like providing education, providing different sorts of things, those are not necessarily accounting services. If you are in the technology space and you are doing, analytics, you're building RPA, you're doing different sorts of artificial intelligence.
Consulting, implementation work.
Yeah, that's taxable in a good number of states.
Really?
So as you start expanding your practice to start doing different things, you have to be aware that it's considered a different thing under state law, and you need to know what you're doing. I mean, if you're an accountant and you're not doing your taxes right, kind of can impact your reputation.
Yeah, and you can't exactly claim, ignorance.
Right, exactly.
Yeah.
And so that's, Dena works with a lot of CPAs and bookkeepers. We do too, not on the compliance side, but on the advisory side, and help their clients understand what they need to do. And then we refer to people like Dena when they're like, okay, now we need help doing the returns. What should we do? Because we just don't do that.
And like Diane mentioned, if you're an accountant or a trusted advisor and you're not doing your own taxes correctly, right? But the one thing that I will say that comes up a lot is, and I'm not an income tax person, but what happens on the income tax? Now that these businesses are registered for sales tax everywhere, have they just increased their income tax footprint? So just something that CPAs for you guys to make sure that you cover.
So I'd love if there's a major decision to try to get you guys back on again to educate us, but we're kind of running out of time today. So anybody that's listening and wants to get a hold of you, Dena, what's the best way?
You can just info@gable.tax.
And what's your website?
It's Gable Tax.
GableTax.com? Mm-hmm. All right.
Or salestaxgurus.com, if that's easier to remember.
Gotcha. And Diane?
So the best way to find all of our great resources, salestaxinstitute.com. And we have a special landing page for Accountex, my presentation. So if you're not here and you want to see what I talked about, you can go to salestaxinstitute.com/Accountex 2019. And we've got kind of a lot of our resources pulled together there. We'll have my PowerPoints for my presentations. And once this is up, we'll put that out there too.
We'll get it in the show notes.
Yes, definitely.
All right. Well, thank you both so much for joining us. It was a real pleasure, and I learned a lot today. Thank you.
Thanks for having us.
Thanks for having us.
Bye-bye.
Bye.